You're listening to Witham's Taxing Topics. When it rains, it pours. Tax regulations and guidance are dynamic, continually changing domestic and international financial waters. Step under Witham's umbrella to better weather the storms of trending taxing topics. We'll share the essential news and information you need to prepare for what's ahead.
Everyone, this is Lynn Musensky-Keck from the National Tax Service Group of Witham. We're excited to be with you today. And as a leader of federal tax policy, we're excited to talk about a new revenue procedure 2025-28 that finally gave us guidance on how we can apply the One Big Beautiful Bill in relation to immediate expensing of research and experimental expenditures that are domestic in the 2024 taxable year. So as many of you may recall and have had painful memories of in 22, 23, and 24, the current tax law requires that you amortize your domestic R&E expenditures over 5 years. That created a lot of cash payments flying out the door for many taxpayers due to previously expecting to be able to immediately deduct their research and experimental domestic expenditures. Under the One Big Beautiful Bill, they essentially provided that starting as of 1/1/2025, moving forward, that you essentially no longer are required to amortize those domestic R&E expenditures and that you're allowed to take an immediate deduction. However, embedded in the OBB as well is a special exception for small business taxpayers. And while I say small business taxpayers, hang with me because it might not be as small as you would expect. So essentially, within the OBBA and provided by the guidance issued by the IRS last week, we were able to receive an understanding of how our 2024 tax returns that most likely for the calendar year are being filed, if extended, on October 15th or to September 15th, how we could potentially be able to deduct our 2024 domestic R&E on those returns. You first have to be an eligible taxpayer, and an eligible taxpayer, again, they refer to a small business, very similar to rules we've experienced within the tax world in the past, and the fact that we must meet a gross receipts test for the 2025 taxable year. So essentially what we need to do for our business entity is we need to add our gross receipts for 2024, 2023, and 2022, add them together, divide by 3. And if they're do not exceed $31 million, then you indeed are considered a small business taxpayer. And this podcast becomes even more relevant to you. I would also remind people that these types of gross receipts, there are aggregation principles that brother-sister companies, parent-sister companies that we've dealt with before in the past. So please be aware that you can't just potentially just look at entity by entity depending on ownership. There might be a requirement to aggregate when determining that gross receipts test. So good news, if your gross receipts for the prior 3 years are less than 31 million, we have some options in 2024 that might be a significant cash provider to you and your company. The first thing I will caveat is if you are in all losses in 2022, 23, and 24, this probably is not relevant to listen to me anymore. This is really trying to focus on taxpayers who had cash due and cash payments out in 22, 23, and 24 related to the 174 domestic R&E capitalization. So again, I'm a small business taxpayer. My average 3-year average gross receipts for 2024, 2023, and 2022 are less than $31 million. And I'm moving on to say, okay, now I have some options that could potentially bring cash back into my business entity much quicker. So the first option that was clarified under the revenue procedure provided by the IRS essentially said, yes, you can amend your tax returns. This was confusing. Under the One Big Beautiful Bill, they insinuated that we can immediately deduct 2024 R&E expenditures on an amended 2024 tax return, making many people frustrated and saying, why would I have to file regularly and then amend immediately after? So what the guidance did clarify is that if you choose to go the amendment route and immediately deduct your R&E expenditures, you would need to amend 2022 and 2023. But for your 2024 tax return that you're filing as of September 15th or October 15th, you can immediately deduct those R&E expenditures. Now, it's not that you can immediately deduct them blindly. You must attach a statement that the revenue procedure indicates of various items that must be included, which also states that you are immediately deducting your R&E expenditures in 2024. And because you're doing that, you agree that you will amend 23 and 22. Prior to the guidance, some people were anticipating they could pick and choose which year, 22, 23, and 24. Although I never got there, it was solidified by the IRS that you cannot pick and choose, that if you immediately deduct 2024 domestic R&E expenditures in 2024, you must amend 23 and 22. The good news about that, all those estimated tax payments that you paid in anticipating potentially capitalizing your domestic R&E over 5 years are going to be quickly returned to you because it's part of the e-filing process, and it's not necessarily deemed an amendment. Things to be aware of is that when you amend a return, the IRS generally states that it will take 16 weeks or longer for the taxpayer to receive their refund. And that could even be longer, in my anticipation, of a potential government shutdown on September 30th. Alternatively, if you can get a significant refund by including the deductions in your 2024 tax return, that should have a turnaround of much quicker of an anticipation of, ideally less than 21 days. So again, if this is relevant for your 2024 taxable year, you really want to talk to your accountant and make sure that you're including that immediate deduction in 2024 with expectation to amend 23 and 22 if applicable. Now, some of you might say, Lynn, I don't really want to amend. I'm a partnership that falls under the BBA partnership regime. I'd have to file AARs, and it's just a headache. Is there any other way? And I would say, yes, there is a great alternative to having to amend. And that alternative is that you can file a change in method of accounting in your 2024 taxable year. Now, many of you know a change in method of accounting can be burdensome and can require additional forms like a 3115, but it is intended by the IRS in their guidance that they indeed are just going to require us to attach a 3115 statement indicating that we're making a method of accounting change. So what does that mean? The method of accounting change means that I can look at all my 174 capitalized costs as of 1/1/2024 related to the 2022 and 2023 taxable year. More succinctly said, I can essentially look to all the amounts in 2022 and 2023 that I have not yet deducted related to domestic R&E, and I can immediately expense that on my 2024 tax return. Again, an automatic change in method of accounting provided through a statement does need to be filed by the extended due date of the tax return. So it's important that we're catching this opportunity now for our fall deadlines. Why that is exciting is that if we provided we address the 280C election appropriately in a specific manner, which we'll talk about in just a second, we should be limited to only adjusting the 2024 taxable year, meaning I don't have to go back to 23 and 22 to amend. I save administrative costs. And obviously in 2024, I'd get that refund much more quickly than if I went back and amended 22 and 23, similar to our previous discussion. So the method of accounting change is great. However, you must have enough income, right, in the 2024 taxable year to absorb all those previous costs. And you just might not have that, which may force you back into amendment. But it's an alternative that should be explored that would be less administratively burdensome. And obviously, it would help most likely get your refund to you more quickly than if you have to go back to amend. Considerations to keep in mind. They do say if we make a small business election and we took an R&D credit in 22, 23, or 24, that we must make a decision of how we're going to adjust our taxable income or R&D credit for the R&D credit claimed. In other words, the same expenditures that they're allowing you a deduction on your tax return are the same expenditures that were utilized in the R&D credit, and they don't want you to double dip. So if you choose to do so, you can say, okay, I'm just not going to make any type of election. I'm just going to do what the general rule tells me under 280C, and I'm going to essentially reduce my 174 R&E expenditures by the amount of credits I took in 22 and 23. And that's the magic bullet in the method of accounting change that will allow you just to make a 2024 method of accounting change and not adjust 2022 or 23. If instead you want to make a late 280cc2 election and say, nope, instead I want to reduce my R&D credit by the amount of the R&D credit times 21%, you can do that as well, but that would force you to have to amend your 2022 and 2023 returns. Overall, that's a lot of information that I just threw at you in this small podcast, but it is extremely relevant that you and your accountants and your business advisors understand this important time frame that we are in order to accelerate deductions and increase our cash benefit that can be received, obviously for purposes of continuing operations and expanding our businesses. And before we conclude the podcast, for all of you who might have already filed your 2024 tax returns or maybe didn't extend your 2024 tax returns and filed around the March 15th or April 15th deadline, there is reprieve for you. If you act quickly and you realize the benefit, essentially what the IRS guidance provides is that to the extent you have a valid extension, you can supersede that return, like many times we do for a variety of reasons, and be able to make these elections to amend or immediately deduct in 2024 or make a method of accounting change. However, if you say, I don't have an extension and I filed by 315 and 415, you still have this opportunity for this one specific purpose. They're granting you an automatic 6-month extension where you can file a superseded return and essentially file by your extended due date as if you had extended to claim these different methods of amending or changing your method of accounting. While it's a lot of information and a lot of processing in a short period of time, because the cash impact can be so significant, we encourage all of you to review this information if domestic R&E has been required to be capitalized in our tax return and did cause you to make cash payments to the IRS. If you need assistance during this time, please don't hesitate to reach out to Witham or any of my colleagues at Witham. And we're excited for you that we might be able to receive additional cash back to help run your business and continue operations. Have a great day.
You've been listening to Witham's Tax and Topics. Contact us with your feedback or suggestions for future podcast topics. Visit www.witham.com for additional information. Send an email to info@witham.com or follow us on Facebook, Instagram, or Twitter @WithamCPA. Thank you for listening.